Sept. We also want to tell you about confidence among U.S. homebuilders remaining at its lowest level in more than a year now. This is all according to the National Association of Home Builders. Their confidence index remaining unchanged at 13 this month. Economists were expecting it to rise. Now, do keep in mind any reading below 50 indicates poor market conditions. Housing market remaining slow following the expiration of the government's tax credit for home buyers and as the foreclosures continue to flood the markets. We are joined now by Bernie Markstein. He's a senior economist, vice president of economic forecasting and also analysis at the National Association of Home Builders, joining us from Washington. Bernie, thanks for your time today.
Glad to be here.
So we're looking at these numbers again from your organization, the National Association of Home Builders. Why is confidence still so low?
Essentially, they're seeing consumers are at this point hesitant. They're uncertain about the economy, and as in your previous story, builders are competing against foreclosed homes.
So we have this oversupply problem. We have a shadow market. What is it going to take to get the sentiment, to get some optimism back?
Ultimately, we need to get the economy moving forward at a faster pace. We need faster job growth. When we have that, you'll see the housing market come back.
Okay, so how fast does it need to be? Because it seems like we have the same conversation week after week after week.
Unfortunately, you're correct on that. Obviously, faster is better. Ideally, we want to see a minimum of 150 to 200,000 jobs added each month. Of course, we haven't been there for a few months, and if we could even more than that, that would be even better. At this point, I think we're recovering from a pause in the economy. There are some signs that things will get a little better, but again, we need a faster economy than we were even likely to get. Any improvement, though, will be good.
As you gauge sentiment with home builders, do you see, I'm sure there are different readings when you're looking at a home builder in Las Vegas or Florida versus a home builder in upstate New York or Ohio.
Definitely, there's some differences around the country, but overall, we're still hearing a lot of negative views, a lot of concern, essentially because the consumer is on the fence, uncertain about their outlook. It really comes down everywhere to jobs, jobs, jobs. With
such supply, with the shadow market, which we've already talked about, how has your industry changed, and how will it forever be changed? I don't think they'll be going back to the way they used to build.
No, and I certainly don't think we want to go back to those days, but we do want to go back to a reasonable, normal level. Essentially, how we've changed in the interim is there are clearly fewer builders. You don't need as many with lower demand. And the type of house that is being built typically is a smaller, less expensive house because you've got a lot of first-time home buyers who are the buyers in the market who can't afford as large a house, and you're competing against foreclosed homes, so you got to keep the costs down.
Right. You're talking about reasonable and normal. So what exactly does that mean? What does that mean if you were to create a painting of that?
Well, when we create a painting of that, we look back to roughly the years 2000 through 2003. During that period, we see there was not the bubble, the housing bubble. Housing prices were reasonable relative to income, and interest rates were at a reasonably good level. Today, we've got the lowest interest rates for mortgages that have been ever recorded. We have house prices, in many cases, back to those 2003, 2004 levels. Couldn't ask for anything more except that people have confidence because their employment outlook is really fairly good.
Bernie Markstein, senior economist, vice president of economic forecasting at the National Association of Home Builders. Bernie, I think I'll be talking to you again soon. All right.
Undoubtedly.
Yeah, thank you, Bernie.